do me a favor and walk me really quickly through what someone who is employed has to do to get a loan. And then when we talk about what somebody self-employed has to do, they can compare and contrast.
Yeah, if you're just a normal W-2 wage earner clocking in and out with a business, then you're just going to provide your pay stubs, your W-2s, usually just the W-2 for the most recent year, because that income is consistent. It's exactly the same month in and month out and more reliable. So it's easier to predict what the income might be in the future.
So my third daughter just started a job as a nurse at a very nice hospital in Metro Atlanta. And how quickly after she starts her job as an employee can she actually count that income toward a mortgage? Is it like right off day one?
Day one, sometimes even before day one. They'll get an offer letter, and as long as they're going to start the job prior to their first payment being due, we can underwrite and approve the loan.
How is it different? What are you looking for from a self-employed borrower compared to an employed borrower?
Yeah, the underwriter's job is all about risk management. So they have to try to predict to the best that they can what your income might be in the future to confirm that you have the capacity to repay the money we're loaning you.
Right.
That's their job.
Right.
And, like your daughter at a nurse, paycheck's consistent. That's easy.
That's right.
But when self-employed, income goes up and down as things change in the world. So the only way to really do that is to get an idea of what your income has been in the past.
Right.
So we go back to those tax returns, look at your net taxable income over the last couple of years, try to predict what it might be in the future.
So what I'm hearing is, number one, and I said this, that you got to be able to show where your down payment's coming from. It needs to be in place for a couple of months. That you need to have a business that appears stable, and that's why they're asking for 2 years. Is that correct?
Yeah. 2 years or 1 year and a profit and loss statement, just depending on what time of year we are.
Yeah.
But yeah, to your point about being stable, what we don't want to see is a decline in income. We want to see that the business is growing or staying at least the same.
Well, let me ask you this. If let's just say you had a business and it made $200,000 one year and then it made $150,000 the next year, that's certainly not good, but would you at least count the $150,000 in terms of income? How would that work? Or would they average the 2 years together?
Most of the time, it just has to, you just dive into more documentation. So profit and loss statement. We want to see how you're doing this year.
Yeah. And
then two, we probably want to get your CPA or tax advisor involved. Maybe they can confirm that your business is growing and not likely to continue to decline. It was just either the $200,000 year was an exceptionally good year.
Yeah.
Or the $150,000 was an unusual off year and not indicative of what your business normally does over time.
Got to be able to source your funds. Where's your down payment coming from? Got to have a couple years worth of tax returns, at least one, and some up-to-date P&Ls. Now, a lot of self-employed people don't have P&Ls.
The P&Ls are going to be used to help support the tax returns. But you're right. A lot of small business owners, they're not working up profit and loss statements every quarter. They just deal with that with their tax accountant at the end of the year. But we can help with that. We can show them what a profit and loss statement is, take a look at their business bank statements or even personal bank statements over the last couple of months and help put it together for them.